how we record credit sales. And let me repeat that. Now we're going to look at how we record credit sales. And credit sales is when we sell goods or stock on credit. Good stock, the same thing. Now we're looking at this transaction that occurred on the 21st of January 2016. It says, sold goods on credit, a value of $10,000 to Cynthia Wholesale Limited. So as usual, the first thing we do is we identify the two accounts that are affected by this transaction. And these are one, sold goods means sales. We sold it on credit to a person, it's not for cash, and this person here is Cynthia. Those are the two accounts affected by this transaction. So we just head them up, sales, because sold goods means sales. And then this other account affected by the transaction is Cynthia Wholesale Limited. Alright, and then we need to find out which category of accounts these two belong to. Now sales is the revenue. Cynthia Wholesale in this scenario is going to be it has to be an asset, liability, revenue, expense, or capital. And since we're selling Cynthia goods on credit, Cynthia Wholesale goods on credit, it means that Cynthia Wholesale will now owe us money. So to us, Cynthia is accounts receivable, aka debtor. Account is a debtor, and so it belongs to the asset class. Belongs to the asset class, right? So we're selling Cynthia goods on credit. Cynthia will now owe us money. Cynthia is our asset. She's an accounts receivable / a debtor. So now, how do we do? When we sell goods on credit, we of course are increasing our sales revenue. The double entry rule for sales for revenue says to increase our revenue with credit. So we do credit the sales account because it's the revenue. And it's to Cynthia Wholesale Limited, and the amount is $10,000. Cynthia is our asset. We're selling her goods on credit. She's going to owe us money. Whenever money is owed to the company by somebody else, it's an asset in the business. But we know the category that Cynthia falls under. She is an accounts receivable / a debtor, right? No, this transaction on the 21st of January 2016, the business selling some goods to Cynthia Wholesale Limited. Will that increase the amount of money Cynthia owes us, or will that decrease the amount of money she owes us when we give her goods on credit? It will increase the amount of money that Cynthia Wholesale Limited owes us. And to increase an asset, we debit. So we debit this account. So we say January 21 sales $10,000. And that's how we record a credit sale, right? And now you might be saying, okay, this Cynthia thing, but if you just think about it for a moment, you realize that it makes perfect sense. You're selling goods to someone or another business on credit. That person or that business will now owe us money. When money is owed to the company, that's the company's asset. But we've spoken about this already when we spoke about current assets, and we said that accounts receivable, aka debtors, are people who owe us money because we sold them goods on credit. And debtors and accounts receivable belongs to the asset class. And the double entry rule for assets says to increase it with debit and to decrease it with credit. For revenues, to increase with credit and to decrease with debit. And by now, you should know those double entry rules by heart. Toodles.